Hey everyone! With the holidays and the new year fast approaching, many employees have bonuses on the mind. Bonuses are always nice to receive, but don't be surprised if your annual bonus is a bit smaller this time around. In today's video I'll explain why your bonus might take a hit this year and what's behind this trend. Economic growth slowing. The main reason companies are scaling back bonuses for 2024 is that economic growth is expected to slow substantially compared to 2022 and 2023. Those 2 years saw unusually high growth as the economy initially rebounded strongly from the pandemic recession. But now growth is returning closer to normal long-term trends. The Federal Reserve has also been aggressively raising interest rates to fight inflation. This is making borrowing more expensive for individuals and businesses alike. Higher rates ultimately cool off the economy and lead to slower job and profit growth. So firms are simply being more cautious and conservative with bonuses given the uncertainty. Job market cooling off. Another big factor impacting bonuses is that the labor market has cooled considerably from its red-hot 2021 peak. Last year, the job quit rate hit a record high as the Great Resignation raged on. Employees had lots of leverage and many secured raises, sign-on bonuses, and better perks. Fast forward to today, quitting has moderated significantly. The balance of power has shifted back towards employers. With slower job growth projected next year, plus signs of layoffs in sectors like tech and finance, companies feel less pressure to dangle big bonuses as a talent retention strategy. The reality is employees now have less bargaining power compared to a year ago. Companies are seizing on that shift and pulling back bonus budgets accordingly. Profit growth stabilizing. The third factor tempering bonuses is that corporate profit growth is stabilizing from 2020-2021's massive gains. Pandemic lockdowns crushed earnings in many industries back in 2020. Then as the economy reopened in 2021, profits skyrocketed off the bottom. Some firms are simply unable to replicate those massive profit increases now that business conditions are normalizing. Less profits equals less bonus budget to go around. Industry and company variation. It's important to note that bonuses do vary substantially by industry and individual company circumstances. Sectors like energy and financial services are actually faring better than labor-intensive businesses with slim profit margins. And even within the same sector, one firm may hand out strong bonuses while another is much more conservative. It really depends on profit trends, labor needs, and management priorities specific to each employer. The banks provide a good example. Most are cutting bonuses this year, some by as much as 40% for investment bankers. However, Bank of America bucked the Wall Street trend and will actually give their junior bankers special one-time rewards despite the uncertain macroeconomic environment. So there are exceptions. Advice for employees. If your bonus ends up underwhelming this time around, here is some advice. First, take a long-term perspective. The economy is cyclical, will eventually see faster growth and loosening labor markets again. Second, if you really feel underpaid, polish up that resume and do some job searches. With layoffs happening in tech and finance, some companies are still recruiting. The job market remains pretty healthy overall despite higher unemployment. The last piece of advice is to set your expectations appropriately going forward. Companies are simply being more prudent in response to slowing growth, inflation, and recession worries. Budgets across the board are getting trimmed. One-time bonuses and variable compensation are easy for executives to reach for when the belt needs tightening. Plan your finances conservatively, and any bonus should be viewed as a nice extra rather than a guarantee. Closing. Wrapping up today's video, tightening economic growth, stabilizing corporate profits, and a cooling job market are all headwinds for robust bonus payouts this year. Employers feel less pressure to use bonuses as a talent retention tool given shifting conditions. While your specific bonus situation depends on your company and industry, temper your expectations appropriately. And take comfort that slower growth today hopefully sets the stage for a strong expansion once inflation moves back down towards the Fed's target. An improving economy in 2025 could mean your next yearly bonus bounces back, even if this one disappoints.